Hey guys, it's Hope. I am going to be going over all of the trades that I placed for the week of April 29th, 2024, all using the concepts that I learned from the 2022 mentorship. I will be showing you trades from the dollar index, NASDAQ, and gold. So if you are interested in watching, please continue. So we're going to start off with the dollar index. Here's what happened at the weekly chart. In the square is what happened before this week. And then in the circle is the result of this week's price action. Here's an 8-hour view of that weekly candle. And then these are the three setups for the dollar index at the 10-minute. And then here's an overlay of the 8-hour and the 10-minute. I'm really liking the way that I see price when I overlay the time frames because I'm able to see where my mistakes are. And so on April 29th, here's what happened inside that 9 a.m. 8-hour candle. In the circle graph, you can see I have a green square outside that 8-hour candle. And then at the 10-minute, here's what happened inside that 8-hour candle. Here was my entry in the blue box. And so at 9:20, price newly trades into that imbalance in the yellow. And then here's the entry at the 1 minute at 10:41 a.m. You can see that blue candle at the 10-minute is expanded at the 1 minute. And I was able to take price all the way to some lower structures. The next trade is on Wednesday, May 1st. Here's what happened inside that 3 a.m. 8-hour candle, a view of that 8-hour movement at the 10-minute perspective. And so my entry was at 1:50 p.m. I have the entry candle highlighted in the blue box at the 10-minute, and then at the 1 minute is that expanded price action. And so I learned a lot from this losing trade, and I was able to create a new rule. So I'm not going to attempt to buy into any more imbalances if price is likely to create a swing high at the highs. So usually if a bearish candle is closing bearishly and it has a couple hours or an hour left, it's likely to close as a bearish candle. And if it is a swing high at some kind of buy side liquidity or higher structures, I'm not going to look at that as a high probability bullish setup. In this slide, I'm comparing the two instances where price respects an imbalance versus when it doesn't. These two charts at the 8-hour is trading at the highs or is past some high structures. So I have that orange line indicating that it is at the highs. You can see price kind of just swimming inside that imbalance and it's not showing any kind of reaction versus the graph on the right where price just taps into that imbalance and continuously moves away from it. And so the new rule is I'm not going to attempt to buy if price doesn't show sensitivity to that higher time frame imbalance at the 10-minute time frame. As price kind of newly moves into that imbalance, I want to see like more quick reaction versus it kind of just staying inside that imbalance. I also don't want to see any higher lows broken if I am bullish. The graph on the right gives me more bullish confirmation because it's not breaking any significant higher lows versus the graph on the left where price is not respecting the higher time frame imbalance and it is breaking all these lows. On Thursday, May 2nd, here's what happened inside that 3 a.m. 8-hour candle. At the 10-minute, you can see price in the green box just newly trades into that yellow imbalance and then begins breaking structure and has that candle wick trade into a fair value gap. And so this is what I really like to see when I am bearish is price taking out highs as it is trading into a higher time frame imbalance. Here's the NASDAQ. In the square is what happened before this week. And in the circle is the result of this week's trading. We have a bullish week. Here is the 8-hour view of that weekly candle. And here are my 3 trades that I placed for this week. And here's an overlay of those 2 time frames, the 8-hour and the 10-minute. The first trade I tried to buy here, then the second trade I tried to buy again, and then the last trade I had a winning trade. Starting on Monday, April 29th, here's what happened inside that weekly candle at the beginning of the week. I had the bullish idea because of that doji candle trading into an imbalance. I thought that was going to give price a push up, but I didn't realize that at the weekly time frame price was trading into that imbalance. So the higher time frame was not agreeing with the 8-hour. And inside that doji candle at the 8-hour, at the 10-minute, here's what happened. And so I tried to buy twice at 12:30 p.m. at the first arrow, and then at 1:20 p.m. Here's that second arrow. So I thought that price traded into the imbalance with those wicks, and then I thought that broke structure there and then was going to create a push up, but I had the wrong bias here. On Tuesday, April 30th, inside that 9 a.m. 8-hour candle, I didn't follow my rules on this trade. The last trade on Friday, May 3rd, here's what happened inside that 1 a.m. 8-hour candle. My entry was right at the opening as this volatile candle pushed to the upside after trading into that imbalance. Lastly, here is gold. Here's what happened at the weekly chart. We had a bearish week. I'm not really interested in gold right now because I'm not seeing my setup forming. So I only placed one trade this week. Here's what happened at the 8-hour inside that weekly candle. And then here's one trade I placed at the 10-minute. And here's the overlay. Here's the reason why I took that bearish trade, because I thought that imbalance was going to push down price. And so on Wednesday, May 1st at 11:20 p.m. and at 1 p.m., I tried to sell. But inside that 2 a.m. 8-hour candle, as it makes its way into that imbalance, price just kind of runs into that imbalance, showing just no respect for that area, and it kind of just sprints into the imbalance. That should have already given me an indication that price was not going to react bearishly. And those are all the trades that I placed for this week. Thank you so much for watching, and I'll see you in the next video. Bye.